Hi, this is P.R. Sundar. Welcome to this special episode where I'm going to talk about mid cap and small cap stocks. Is it time to buy or it's better to wait? First, let us look at the larger picture. Sometimes in October 2023, that is the end of October 2023, Nifty was around 19,000. So that is when two good things happened. One, BJP won in 3 major Hindi-speaking states out of the 5 state elections. So then people got an idea that, in 2024 also, the BJP will be winning. Second thing, the US, the Fed chairman indicated, after a series of rate hikes, going forward, the rates will go down. So because of these two things, Nifty shot up 3,000 points, which is roughly about 15% in a matter of 2 months. That is November and December 2023. Then market started rallying from there. And then, the parliament election came, BJP won. Not BJP, say NDA won. And then the rally continued. So Nifty went to 26,300. From 19,000 to 26,300, which is a 40% rally. But this is the case of a large cap. And the mid caps during the same period would have gone 60-80%. Small cap would have gone even 80-100%. So during this period. Now, the question is this euphoria, a 40% rally in a matter of 1.5 years, that too in large cap, mid cap and small caps are doing even more well. So is this euphoria warranted? And definitely no. Why? Number one, BJP came to power in 2024. Since then, we all know left, right, center, and every corner, wherever there is a possibility, they increase the tax. Long-term capital gain tax was 0. That was brought in 10%. STT was brought in lieu of long-term capital gain tax removal, but that STT was not removed. Then parallelly, long-term capital gain tax also increased, STT also increased, short-term capital gain tax increased, indexation benefit was taken out, the dividend was taxed, right? So if an ultra HNI client getting a lot of dividend, now his income will become more than 5 CR, he will end up paying 42%. Earlier, the company pay about 20% dividend distribution tax, but now these people paying 42% tax. Debt fund removed. In fact, the 2024, when the BJP won for the 3rd term, right, the first budget, it was not a full budget, it's a vote on account, right? Nirmala Sitharaman did present the worst possible budget. There was no budget where the taxes were increased on 4 counts related to stock market. Number 1, short-term capital gain tax increase. Number 2, long-term capital gain tax increase. Number 3, STT increase. Number 4, indexation benefit was taken out for all the asset classes. So, but despite this, because of this retail people euphoria, the market continued to move higher. Especially a common man, during the coronavirus, few things happened. Number 1, they had a lot of free time. So they started watching YouTube and they started learning stock market. So that is how people like me, grow very big in YouTube. And also, because of this coronavirus, so people thought it is necessary that we should have another stream of income for us, right? And then they started entering into the stock market in huge numbers. And then market started rallying, and it was a non-stop rally. And especially with the people, all these like COVID people who came to market, they never thought the markets can go down. So they thought that the market will always go up. They continue to pump in the money. So despite valuations are not justifying. So what has happened? One side, the taxes was increased in every respect. Other side, the GST has been charged everywhere, right? And the middle class people were suffering, right? And then why stock market should trade at such a high valuation, right? The valuation was very, very high. And now the India's problem is not only the local problem. So India's problem is a global problems now. And look at the way the central government, they don't have a good relationship with Sri Lanka, Maldives, Bangladesh. Pakistan wanted to say forever we used to have not a good relationship, but at least other neighbors, then Canada, right? Now, the problem with having a problem with disagreements with Canada, the Canadian pension fund invested a lot of money in India. So if there is any tension in the relationship between India and Canada, then Canadian pension fund is likely to sell the shares here. And moreover, Canada, they are like a one union. Europe, America, and Canada, they are like one group, right? So they will support each other. So then maybe Norway pension fund, I think Norway Wealth Fund, I think that's the largest fund in the world, right? So then by taking this euphoric behavior of the retail people, and so these foreign institutional investors started booking their profits. And the profit booking was so severe that so far Nifty has fallen more than 12-13%. Mid-cap index has fallen about 20-21%. Small cap also has fallen similar. This video I'm shooting on Friday. So as of Friday, the Nifty closed at 8-month low, right? And then, FII selling is so huge. They've sold for more than 3 lakh crore since October, right? And this is the first time in the last 25 years, okay, Nifty has closed negative for 4 months, and then this month we still have 3 more trading sessions. The 5th month also Nifty is likely to close negative. Sometimes markets can fall. Globally there is some problem. Lehman Brothers, globally markets also fell. Nobody complained. Okay, long introduction. Okay, now I'll take you to the chart. Okay, we will see what actually happened in mid-cap stocks in 2018. Then we extrapolate that. Now, without wasting the time, I'll take you to the computer. Okay, so this is the chart. Now, there was a big consolidation period, from 2014 to 2016. And somewhere around 2016, the mid-cap formed a bottom. So this is a monthly candle, right? So because we are looking at a longer time picture, so therefore we are looking at the monthly candle. So what happened? So after bottoming out, the mid-cap and small-cap stocks started rallying from March 2016 to January 2018. So it is roughly about 2 years, right? So many people, they are thinking, sir, every dip is a buying opportunity. Market has already fallen. Sir, if I buy now, can I get a good return in 1 month, 2 months, right? But normally mid caps and small caps, if the trend sets in, the trend is likely to continue for a few years. right? So this is the bull run that lasted for 2 years. You can see the information. So it was 671 days. Okay, that's about 2 years time. And then mid caps rallied 99%. So that means, in fact, we have not even put it correctly. So if you put it at the peak, so it is more than 100%. Okay, so point number one, as and when mid cap index has shot up more than 100%, so that is definitely time to be careful on the long side. It's not time to add more long positions. Then what happened? The markets, came under profit booking. 1, 2, 3 months profit booking was there. 4th month there was recovery because the market has already fallen so much. People start buying, and the market recovers. Then what happened after recovering? Again, the following month fell more than how much it has shot up in this month. Then again consolidation, then again started falling. So now see this fall, if you look, okay, this one, roughly about 50% correction. 100% increase, then after 100% increase, the 50% correction. Actually, I tell you, these numbers, if you're thinking, if I buy a stock for 100 rupees, okay, 100% appreciation means it goes to 200 rupees. 100 rupees stock goes to 200 rupees, then only it is 100%. But while reversing from 200 rupees, even if it falls 50%, the 200 rupees will become 100 rupees. So you don't gain anything. 100% up, 50% down means, okay, your return is zero. Don't think that 100% up, 50% down means I'm gaining 50%. That's wrong. So you can see, actually the market has come lower than this level or at this level. So 2 years of big bull run and then 2 years of bear run. So finally, after 4 years, the mid-cap index has come to the same level. Of course, we cannot consider this because this is a coronavirus. Right? If not, probably market would have bottomed out somewhere here. Right? So in 2016 to 18, there was a big bull run, 100%. 2018 to 2020, the entire rally has been wiped out. But if you look at a percentage, that may be misleading. 100% up, 50% down. Now what happened? Post-COVID, the markets went up. Now, we look here. So, after rallying, there was some kind of a profit booking. So, we take the lowest level. So, that lowest level was somewhere here, right? So, from here, once again, the mid-cap rally started. So, that is somewhere in 2022, right? After coronavirus and after second wave of coronavirus, after Russia-Ukraine war, the markets bottomed out somewhere. And then you see the market shot up. Look here, it is 148%, right? So that too in 824 days. So here it was only 100%, but here even the rally this time is much bigger than 2018. Why the rally is more bigger than 2018? This time, lots and lots and lots of retail people have come to the market. And then, mid-cap rally, it was supported by retail people. So every retail investor I'm meeting, they are saying, sir, I'm putting my money in SIP, in either mid-cap mutual fund or small-cap mutual fund. And people are not putting money in large-cap mutual fund. So, as I told you, as long as it's more than, if you take even this level also, okay, it's roughly about, 133%. So anyway, more than 100%, so that is time to be careful. Now, after a peak, so what has happened? The profit booking came. Now you can see the profit booking here is actually more severe than the profit booking here. Right? But the reason here, this is a profit booking. Once the FII start booking the profits, retail people get scared, they run away. But here what happened? It is only the FIIs who book the profit. The retail people continue to pump in the money. Right. Now, how much this has fallen? Now it has fallen only 21%. Right. So, logically, in the 2018 rally, so, even if you take, you don't have to take this level, coronavirus, but you look at the before coronavirus. Okay. So, before coronavirus also, it was down somewhere around 27%. Right. Because of coronavirus, it has gone to 50%. So, which means that, still, okay, another 5 to 10% correction is possible in mid-cap index. If any coronavirus kind of thing comes, again, we might go back to this level. Okay, so you can see this is what you have seen here. We are after 4 years, right? So mid-caps came to the same level. Okay, so this is a free version I'm using. So that's why it is, okay. So you can see this one. From where the rally started, it came back to the same level, right? Okay. Now, another thing here you see, here you look at once it reached the peak, it was a gradual profit booking, right? And then 1 month it went up, again some gradual profit booking, again slightly went up, and there was a big fall, and then and so on. But if you look here, this is not a gradual profit booking. So the October month was severe profit booking, followed by 2 months of rise, again severe profit booking, again severe profit booking. Right. Now, first let us look at positives and then negatives. So the only positive that we are having is the retail people sentiment. Right? Okay. But there are many negatives. Before going to that, let me tell you, okay, here you can see the process. It took almost how many months? Like, once it started falling 2, 4, 6, 8, 10, 12, 14, 16. It took about 2 years time. I'm not taking the coronavirus. Even without taking the coronavirus also. So it took how many? 546 days. Okay, so that's almost 1.5 years. So that is why now I feel that, now the correction is very severe, right? And then the market may not fall much, okay, maybe another 5%, 10%, but, there is no way the market will be taking out this high at least for another 1 year. So because at least, 1 year to 2 years is the time frame, a market to recover. So, in my opinion, the time correction will be more in the coming months rather than the price correction. But if price correction comes also, no, it's not ruled out. It's possible. So, the first thing is that, whatever happened in 2018 to 20, 2016 to 2020, the same thing may not happen. There are something can change. But remember, don't always be optimistic, and it can happen bigger on the negative side also. Right? Okay. So few things let me tell you. Few negatives. Number one negative, okay, stock market sentiment, it is worst in this year. Why? Because last year, short-term capital gain tax increase, long-term capital gain tax increase, so the taxes have been increased left, right, and center. So in the last 10 years, I would not blame finance minister because, at the end of the day, she is not benefiting anything, right? She is doing for the party, she is doing for the government, right? And they take away everything, and then finance minister only takes away the blames. Everybody blames the finance minister, right? As rightly said by one of my friends, right? Even the opposition parties, okay, they don't fight it in the GST council, right? Outside they come and talk, no, why this, why that. But in GST council, they don't put the proposals, right? So, finance minister taking all the blames on herself, okay, she's taxing everybody, left, right, and center, and all the ways, right? And you see, where the tax has not been increased, you let me know in the last 10 years. So you buy a second house, no tax benefit. You provident fund more than 2.5 lakhs or something, that also taxable. Then, insurance premium more than 5 lakh rupees also taxable. Insurance premium is subject to GST. Insurance proceeds subject to tax. Debt fund, no indexation benefit is taken out. A dividend has been taxed. Capital gain has been taxed. And that tax has also been increased. So in every respect, the tax has been increased. Okay. So there is no reason to be so much optimistic about the stock market when taxes are, rising left, right, and center. And second thing, our market, is a highly valued market. And the third thing, the Trump has come. So, he is creating a lot of trouble to a lot of people, right? Because he is looking for his own benefit, his country's benefit. He's not looking at other people's benefit, right? That policy flip-flops, this and that, so that can do. And then, in the last 25 years, Nifty has not fallen for 4 consecutive months. I think once it has fallen in 2001. Okay, this month, now we still have 3 more trading sessions. So Nifty is likely to close negative for 5th straight month, which has never happened in the last 25 years. That's one negative. Second negative, consistently FIIs are selling, right? So it seems that, FIIs are, they decided to leave India. So this is a quit India movement among FIIs. So lots and lots of people are leaving India. They are finding better picture somewhere else. Say for example, if you look at the Hong Kong market, it was up 15% in the last 1 month. It was up 4% in just one day, yesterday. But in Indian market, it is down for 10 out of last 11 days or 11 out of last 12 days. I don't remember exactly. So our market is continuously falling, right? And then now there's a big tug of war going on between mutual funds and FIIs. LIC is not in a comfortable position to put the money. In 2013, when the market came to a big problem, 2013 started, I think 2015, about 1.5 years later, market hit a bottom. That is when the LIC pumped in a lot of money to revive the market. And after that, Nifty has never fallen to that level. But now LIC has become a public listed company. So they are answerable to the shareholders. If they come and support the market, they are already sitting with a loss. There is one news report that said, in the last 2 weeks alone, LIC is at a loss of 94,000 crores. So now their own share price will keep falling, right? So LIC also cannot support. Now, how long this FII selling will continue? Although we are looking, FII selling is more than 3 lakh crore, this and that, but we are only looking at the secondary market. Probably they are buying from the primary market, then they are selling it in the secondary market. Still there is a euphoria in IPO market. Okay. So many times I've spoken, right? Normally I don't speak about new issues, right? But only one video I came out when Hyundai IPO came. When Hyundai parent company trading at 5 PE ratio in globally, why should they sell for 25 PE ratio? And now what has happened? Now this Trump and Elon Musk is arm twisting, right, against India. They are putting all the Indian citizens handcuffed, and sending back in military aircraft. So to threaten India. So what has happened? India has decided to reward Elon Musk. They reduce the electric vehicles tax from 110% to 15%. Of course, the official announcement has not come, but it has come in all the newspapers, right? So where is 110%? Where is 15%? And who is going to benefit? It's only Elon Musk, right? Let me tell you, they will do it things, they will do things in such a way that, okay, only Elon Musk can benefit. If the same benefit is extended to Chinese companies, let me tell you, they will bring high quality vehicles at a very, very cheap price to India. But somehow they will make rules and regulations in such a way that the Chinese cars do not enter India, right? So what has happened, because of that, the entire auto industry, the future is, is a questionable. And look at the Tata Motors, it's already trading at 7-8 PE ratio only. Normally, auto stocks will trade 20 to 30 PE ratio. Tata Motors is trading at 7-8 PE ratio, but still people do not want to buy, right? But Hyundai came out with a 25-27 PE ratio, but still people have bought, right? And that was the largest ever public issue, 27,000 crore, right? Out of that, about 15,000 crore was reserved for FIIs. So those are happily they buy and they sell it in the secondary market, right? So therefore, those data, they may not be, like what to say, it's not as bad as it looks, right? There are a lot of things inside, right? And FII in futures and options, short selling position consistently above 80%. For the last 4-5 months, FIIs have never been so bearish about India. So, therefore, in stock market, the people say, do not catch the falling knife, right? I always say, hope market recover. Then immediately I will say, hope is the worst enemy in stock market. So, hope is the worst enemy in stock market. So don't ever say, okay, market has already fallen so much, hope it will recover. It may recover, it may not recover. Nothing can be done, right? I always say, people know, the people talk, no, India is the fastest growing economy, India is this, India is that, Okay, let me tell you, like, if somebody is offering, a silver coin, okay, asking for 100 rupees. Another guy is coming, sir, silver, so cheap. You see, I am giving you gold coin, right? So gold coin is more precious. Sir, you give me only 10 lakh rupees. No, you are not going to give, right? Definitely the gold coin is more precious than silver. But how much premium you are going to pay for it? So India may be the largest growing economy, but whatever India grows, right, tax also grows, GST also grows, income tax also grows, right, left, right and center. So whatever growth is there, the government is taking away almost 1/3 of it. Then how much growth is left for you, right? And then, for that, how much premium you can pay, right? Worldwide, emerging market economies usually trade at 10 PE ratio. But here we trade at 20-25 PE ratio. Mid caps and small caps trade 40-50 PE ratio. Right? Why there should be so much premium? Right? So, economy is different, politics is different, market is different. So don't get confused. Right? Your political view is different, your economy view is different, and then your stock market view is different. Of course, economy and stock market, so they both are interrelated. But, there are so many other factors, right? So, earlier, long-term capital gain tax is 0. Okay, now you pay 12.5% long-term capital gain tax, right? So, which means that last year if you have made 100 rupees, the entire 100 rupees come to your pocket. This year you make 100 rupees profit, 12.5 rupees you pay tax to the government, then only 87.5 is coming to your pocket. So economy is good. Last year 100, this year also 100, but then what you are taking is less. So this way, like let us say, you have some funds, okay, you book the profit, okay, after booking the profit, you pay the tax. So after paying the tax, what are you going to do? You may have to re-enter into the market. So what happens? You park that money in debt mutual funds. So earlier debt mutual funds indexation benefit was there. Even now that is taken out. So there again, another 30% tax goes. So this way, economy is different. But as the economy grows, okay, the government increases the tax, then whatever, you get 100 rupees, okay, that entire 100 rupees is not yours. Out of that 100 rupees, how much tax you are paying, then how much inflation has shot up, how much your money value has come down, and then factoring in that whatever you are getting, that is your real return. So your real return is your return minus inflation minus government taxes, right? So, if you calculate that, you may not get, what you are getting about 5 year or 10 year before in Indian markets, right? On top of which this STT increase, this and that, is creating a lot of problem. So I can tell you, right, if you think that market has already fallen so much in the last 5-6 months, okay, normally mid cap and small cap, the cycle lasts for 1.5 year to 2 year, right? Once the trend sets in, so the trend continues for 1.5 to 2 years, number one. And number two, there will be more price damage. So there will be more price damage, there will be more time correction, so you will have a lot more opportunities in future to enter at lower level. However, this is about the overall market, right? If you look at the last from October to now, okay, most of the large cap stocks have fallen 10, 20, 30%. Most of the mid cap stocks have fallen 50, 60%. But look at Bajaj Finance. It has actually shot up 20%, right? So stock market is such a place, even during the worst time also, there may be some stocks that may be doing well. Although I'm saying, valuations are so high, but there may be some pockets where the valuation may be lower. So remember, I'm not talking about the individual stocks. I'm talking about the overall market. So it means that, most of the retail people, they do not know how to choose the individual stocks. They usually put the money in mutual funds. Usually they put it in a large number of stocks. So usually the mutual fund returns are more or less, same as the index. If you are putting the money in mid-cap mutual fund, mid-cap index, how much return it gives, so this fund can give maybe same or slightly more, right? But there won't be any big difference. Like mid-cap index is up by 10%, this fund will not give 50%, may give 12%, 13%, right? So clearly the risk reward at this point of time is not favorable to investing in small cap and mid cap stocks. So, the people may argue, sir, what happened last time that may not happen this time. Let me tell you, it can be even bad. So, you see, when 2018, when the mid cap started correcting, by 2020, when it came to the lowest level, okay, after that only the big fall came because of coronavirus. Things can happen, something like that, So better be careful. So hope you enjoyed watching this video. Thank you for watching.